More analysis on those escalating tensions in Ukraine that Bob just talked about. We turn now to Paul Christopher. He's Chief International Investment Strategist at Wells Fargo Advisors. Paul, you know, we're hearing from Russia's Putin that actions from Ukraine are, quote, anti-constitutional. The White House is warning more sanctions if against Russia if they misbehave. At what point does this crisis become an issue for the markets?
I think if we begin to see the events in Ukraine sort of cycle out of control, if the government in Kiev loses control of events in eastern Ukraine, then the markets have quite a bit more to worry about. But of course, between now and then, the tensions will sort of simmer at a low boil, and you could, from time to time, get an event like the last couple of days' worth of events that could give the market some pause as they try to discount the future.
But today, Paul, sounded like a little more than a low boil. There are reports that Russian supporting factions have taken over multiple government buildings in the eastern part of Ukraine, and Ukraine air power was being used to reclaim an airfield in that part of the country. It sounds like it is getting hot fast.
Well, it is getting hotter, but I don't think that this is going to be something that necessarily spirals out of control. Look, the Russians are probing here. They're looking for weakness. They're looking to shake loose some of the eastern provinces at as low a cost as possible. And I think they'll continue to push this way until the Ukrainians push back with enough force to neutralize the probing that the Russians are doing. So we may see some additional violence in the coming days and weeks, but I don't think we should necessarily conclude that it's the beginning of a civil war.
Mm-hmm. Well, we saw in the bond market today that Treasury prices initially rose on those Ukraine headlines, but we didn't see much action in the gold markets. In fact, gold prices fell sharply. Why is that? You'd expect just the opposite.
Yeah, that's a good point. And if we were going to see more concern about Ukraine in the markets generally, we would expect gold to be rising on that geopolitical risk. In fact, gold was off today. I think gold was tracking something else. I think gold was tracking the CPI and a modest improvement in CPI, which indicates that the Fed does not have to worry about disinflation. The Fed can go ahead with its plans to continue tapering stimulus in the months to come. That's going to mean higher yields, eventually higher interest rates, and lower gold prices.
All right, we'll leave it there. Paul Christopher, thank you so much. Paul Christopher,
my pleasure,
from Wells Fargo Advisors.